Hi everyone, in this video let's discuss about the Audit of Banks chapter in CA Final Audit. This is basically a revision video rather than the concept discussion video. So we'll quickly go over what are the points that we written in exam. Okay, you could just start marking it and just read that. If it is a 6 marks question, you get around 3 to 4 marks, which is okay, right? Then getting low marks, right? It's fine. Now, let's begin. Banks have certain characteristics which are distinguishing them from the other commercial enterprises. There are certain factors or characteristics which are there particular to a bank which is not there in the other. What are those? Custody of a large volume of monetary item. Custody of a large volume of monetary item. Large volume and variety of transaction which involves or which requires complex accounting and internal control system. Wide network of geographically dispersed branches which necessitates greater decentralization of authority and dispersal of accounting and control function. Assumption of significant commitments without transfer of funds. Engagements in transactions that are initiated at one location but are completed or recorded at the other location. See, I could start a transaction from Chennai, which is I'm transferring a money to a person in Mumbai. Okay, but my bank account is in Bengaluru. So these are in 3 different locations. Direct initiation and completion of transaction by the customer without any intervention of the bank's employees. Integration and linkage of national and international settlement system that could pose systematic risk, which is market type of risk, right, to the countries in which they operate. Regulatory requirements by governmental authorities. Let's repeat it quite fast. Custody of large volume of monetary items, large volume and variety of transaction which requires complex accounting and internal control system, wide network of geographically dispersed branches, assumptions of significant commitments without transfer of funds, engagement in transactions initiated at one location, recorded at other location but managed at another location. Direct initiation, completion of transaction by the customer without any intervention, integration and linkage of national and international settlement system and regulatory requirements. Then the next question could be, what is specific audit consideration? There is special audit consideration which arises when I do an audit of a bank. What are these special audit consideration? What could be there? One is the with respect to the risk. The risk quite different type of risk, right? So particular to the with respect to the nature of risk associated with the transaction. Scale. So quite a big. We have so many number of branches, so many difference of cash withdrawal mechanisms like ATMs and quick IMPS, NEFT, RTGS. A wide number of things, right? So scale of banking operation and exposure. You could have recently heard about the SVB crisis, right? Within a day, they have most of the deposits have been withdrawn. That's how the exposure is. Extensive dependence on IT. And then effect of statutory regulatory requirements. Continuing development of new products and new services, and there are new requirements from the customer end. So this may lead to huge operational and financial risk. Huge operational and financial risk. Now, let's discuss about what are the legal frameworks that governing the functions of bank in India. See, at least you are expected to know 5 things among this. Okay, one would be Banking Regulation Act, which is so simple. I will tell you: Banking Regulation Act, Reserve Bank of India Act, Companies Act, State Bank of India Act, and PMLA Act. Okay, these are things which you could remember: Banking Regulation Act, Reserve Bank of India Act, Companies Act, State Bank of India Act, and PMLA Act. Other things you could remember: IT Act, and then you have this Payment and Settlement Systems Act, Cooperative Act, and rest of them are things which you could remember. Surface you also have Securitization and Reconstruction of Financial Assets and Enforcement of Securities Interest Act 2002. So these are things which you could generally remember or correlate with. Okay, let's repeat it: Banking Regulation Act, State Bank of India Act, Reserve Bank of India Act, Companies Act, and then we told PMLA Act. And then we have Banking Companies Acquisition and Transfer of Undertakings Act, Regional Rural Banks Act, Banking Companies Acquisition and Transfer of Undertakings Act 1980, SURFACE, and then Credit Information Companies Act 2005, Payment and Settlement Systems Act 2007, and last one is Cooperative Societies 1912 for Cooperative Bank. Then the next one is form and content of the financial statement. See, for the bank we have different format, right, for the balance sheet. So that is governed by the Form A of the 3rd schedule to the Banking Regulation Act 1949, and Form B sets out the profit and loss accounts format. So Form A sets out the balance sheet format, while Form B sets out the profit and loss account format. And in this is currently not applicable to the banks. Then public sector banks and private banks are listed. Listed banks are required to follow or comply with what regulations? SEBI regulations. Audit of accounts and appointment of the auditor. A person duly qualified is only eligible to be appointed as an auditor. So most of the banks will be, generally it will be nationalized bank or public sector bank, and generally they appoint 4 or more auditors, depending, there are joint auditors, 4 or more auditors as a central auditor who are acting in the capacity of joint auditors. What would be the appointment letter contains? It contains a period of appointment, who are the auditors, who are the previous auditors, what are the procedure requirements to be complied, maybe it could be a letter of acceptance, and then statement of division of work. Because this is a joint audit, we have the division of work, responsibility and review, and reporting responsibility and scope of assignment. And in case of branch auditors, appointment letter is given on similar lines except in regard to particulars of other auditors and statement of division of work. See, if I am going to do a branch audit, my all the branch audit formats should be same except the location and the work description should be different. Okay. Then generally branch audit will be carried out by a single auditor. It will not be joint audit. Generally. Okay. Then who is the authority appointing the auditors? For a banking company, it will be appointed by, since it's a company, it will be appointed by the shareholders in the annual general meeting. If it is a nationalized bank, it will be appointed by the board of directors of the concerned bank. If it either of these two, which will require an approval of the Reserve Bank of India before its appointment. For State Bank of India, it is to be appointed by the Controller and Auditor General of India, that is CNAG, in consultation with the central government. For RRB, that is Regional Rural Bank, it will be appointed by the concerned bank with the approval of central government. Let's repeat. For the banking company, it will be shareholders at the AGM. For nationalized bank, it will be the board of directors of the concerned bank. Either of these two cases will require the Reserve Bank's approval prior to the appointment, and then State Bank of India is appointed by the CNAG in consultation with the central government. For RRB, that is Regional Rural Bank, it will be appointed by the concerned bank in consultation with the central government. Then, conducting an audit. It involves the following 5 stages. Let's repeat it. Okay, this is very important. If you don't know the content within it, it's fine. Okay, but before you go on to the exam, this table is very much important. So let's please repeat it. We will read it once and then we'll repeat. Please repeat it together with me. Okay. And then initial consideration. It involves acceptance and continuance. So this is by way of letter of acceptance. Declaration of indebtedness. Whether I am going to liable to pay any money to them. Whether I am indebted to the company or its holding subject. That declaration is to be made. Internal assignments in banks by the statutory auditors. Terms of audit engagement. Communication with previous auditor. We have to relate it with one essay, right? Clear? Then planning. Establish engagement team. Let's repeat it. Okay. Acceptance and continuance. Declaration of indebtedness. Internal or assignments in banks by statutory auditors. Terms of audit engagement. Communication with previous auditor. Planning. Establish engagement team. So this with respect to initial consideration. Now we have to understand. Understanding the bank and its environment, including the internal controls. Understanding the accounting process. Understanding the risk management process. What are 3 things I have to understand? I have to understand the bank, its environment, including the internal control, its accounting process, and its risk management process. Third stage would be risk assessment. I have understood. Now I have to assess the risk. Identifying and assessing the risk of material misstatement. Assess the risk of fraud, including the money laundering. Assess specific risk. Risk associated with outsourcing of activities. 4 types of risk. I have to identify and assess the risk of material misstatement, risk of fraud, including the money laundering, specific risk associated with outsourcing of activities. The 4th stage is execution. Engagement team discussion. Prepare response to assess the risk. Establish the overall audit strategy. Audit planning memorandum. Determining audit materiality. Consider going concern. Engagement team discussion. Prepare response to assess the risk. Establish the overall audit strategy. Audit planning memorandum. Determine audit materiality. Consider going concern. Then we have the last stage, which is nothing but the reporting. Now that we have done all the audit stages, now we are finally at the reporting stage, which sets out the following reporting requirements. One would be independent auditor's report. Then LFAR stands for long form audit report. Specifically, this is for banks. Report any other matters to bank, regulator or government. So let's repeat all the 5 stages together. Initial consideration, understanding, risk assessment, execution and reporting. Initial consideration, understanding, risk assessment, execution and reporting. So let's move on. Okay. Understanding the risk management process. I have to understand, see, I have given this point, right? Understanding the bank And last one was understanding the risk management process. In this, we have these 5 points. One was oversight by those charged with governance. Oversight by those charged with governance. Identification, measurement and monitoring of risk. Control activities. Monitoring activity. Reliable information system. Reliable information systems is similar to CRISM. Okay. With some changes. Okay. Oversight by those charged with governance. Identification and measurement and monitoring of control risk, and rest all are from that. Control activities, monitoring activities, reliable information system. Then. Audit planning memorandum. The auditor should summarize the team's audit plan by preparing an audit planning memorandum in order to describe what are the scope, what are the extent of audit procedures, what are the significant issues, what are the risks identified, and then I have to provide an evidence to it. Then, special consideration in IT environment. So with that, now we have IT environment. There are huge technological development which comes with associated risk, right? Which comes with the associated risk. Those have to be taken care of. So, what are the things the bank should share with the auditor? They have to share their IT policy. They have to share how the data is being processed. What are the data interface? What are the principles with respect to data integrity and data security? What are the BC, business continuity plans and disaster control plans? What are the accounting practices that are followed for manual and critical accounting entries? And what are the control over key aspects? What are the various e-banking and internet banking products and channels? What are the MIS reports? How much effective is the major exception reports which are generated, and process of generating various information? So let's repeat. So things the bank has to be provided to the auditor. Overall IT policy, structure and environment, data processing and data interface, data integrity and data security, business continuity plan and disaster control plan. What are the accounting policy for manual and critical accounting estimate, control over key aspects, control over recording various e-banking channels and internet banking channels, MIS reports, major exception reports, and process of generating various information. So it is a responsibility, right, of the statutory central auditor to understand whether the IT environment is in place, whether the design is effective, whether the implementation is effective, and whether it gives the required results, right? What are the things you have to check? You have to check whether it is authorized, accurate and complete data is available. Whether authorized, accurate and complete data is available. If there is any interruption, whether it is properly restored. Whether there is access control restriction, whether the system is able to prevent the unauthorized amendments, whether there is segregation of duties, whether there are if any changes are made to the parameters or the threshold limits, whether they are authenticated, if any charges are manually calculated, whether the calculation is proper, whether the exceptional transactional reports are being authorized and verified by the daily concerned official by the daily basis. And I have to check its impact on the financial statement, impact of exceptional transaction on the financial statements. The master data or the threshold or the parameters cannot be altered without except for the authorized personnel. And the GL should be reconciled with the head office. And GL should tally with all the subsidiary books. Okay. It's not generally in CBS, it's not a double entry accounting. Okay. You have to post separately in each. That's why there is a need for reconciliation. There's a need for reconciliation. Let's repeat. Authorized, accurate and complete data is available. If there is any interruption, then it should be properly restored. Prevents unauthorized amendments. Access control restrictions are there. Segregation of duties is there. Parameters are authenticated. Changes in parameters are authenticated. Charges calculated manually should be authorized. And then exceptional transactions should be reviewed by the concerned officer on a daily basis. Master should be altered only by the authorized personnel. GL should be matching with the head office. GL should be matching with the subsidiary books. Okay. Then, generally, the branches will be headed by internal audit department known as Chief Audit Executive. Okay. Then, here comes the concept of risk-based internal audit. Risk-based internal audit considers not only the auditing factors but also the risk which is associated with the business. What are the different risk assessment procedures could be? Process includes the business risk, the control risk, and the assessment of level and direction of various risk areas, and drawing up of risk matrix. Now, here comes again the important area. Okay, from here on you have to understand what is the heading, then only you have to write, because there are similar points but the question could be different. Now, we are going to discuss the area of internal control in selected areas. Whenever a question is asked for internal control in selected areas, you have to write this. Okay. We'll just focus on keywords No, because it runs to pages, so we'll just focus on keywords. Okay. General internal control should be, if I'm going shifted, then regular transfer of between departments should be there. Okay. Make a check per approach should be there. Arithmetical accuracy should be proved, and bank form should be kept by the authorized person. Mail should be opened only by a responsible officer. Signature book should be there only with the responsible officer. You have all these MCQ here, right? Then insurance policy should be taken for all the losses. Financial powers should be clearly defined, and surprise inspection should be made. Surprise inspection should be made. Sorry. Then second point was with respect to the cash, joint custody should be there. Normal daily checking should be there. Physical verification of cash should be there, and should agree with the books. Okay. No access should be there for the cash except for the authorized person. Counterfoil should be signed by an officer. Okay. Payment should be made only after the voucher is duly authorized. Then receipts and payments total should match. Which I'm writing in the book should match with jail. And then high value should be verified by the branch manager or as assigned officer. And the excess cash balance should be remitted on a daily basis to the currency chest based on retention limit. Say, if I'm having excess balance of my branch limit is 5 lakh, okay, generally till 5 lakh thousand it will be allowed, okay, generally, okay. But if it's 6 lakhs, then after excess 1 lakh should be remitted to the chest. Chest is nothing but it's a reservoir of currencies, okay. There all the currencies will be stored. That's known as chest. It will be given. We mention for this particular locations of branches, you will have to deposit here. Okay. Then clearings. Under truncation system implemented by RBI, electronic image of check is transmitted to the paying branch through this clearing house along with the relevant information like on the data, MICR band, date of presentation, presenting bank, etc. RBI guidelines, I have to confirm with the customer if I'm paying a check beyond rupees 5 lakh. And signature should be verified, and then unpaid checks should be returned back to the customer. Bills for collection, it should be entered in the register by the proper officer. It should be credited only after the bills have been collected. Bills are sent by one branch for collection to other branch are not taken in bins for collection. Twice the amalgamated balance sheet. See, I have received bills for collection from the customer. I have sent it to the nearby branch. If both of them accounted bills of collection and I considered it same, it is double entry. Dual recognition, right? That's why I have to be careful while I'm consolidating the things. For bills purchased, an officer should verify it is there, title is there with the bank, sufficient margin should be there. If I'm unable to collect the bill on due date, immediate steps should be taken for recovery. Irregular outstanding should be reported. Bills purchased outstanding at the close of the year should be allocated between 2 years. Then, with respect to loans and advances, I should give advance only after satisfying the bank requirements that the is credit worthy. Then documents should be executed, sufficient margin should be kept based on the collateral, and then security should be in the received and documented properly and should be in the joint custody, and registration required. For example, I'm pledging my house, okay, then that requires the registration in the name of the bank, that has to be there. And generally sanction limit and the bank balance should be within the drawing power and the sanction limit. Temporary limit could be there given for additional 20% for a period of maximum 90 days. Okay, if it's beyond that, you have to report it. If there are any irregular accounts, those have to be reported, and at least the operation, whether the account is operating, should be reviewed at least once in a year, at least once in every year. For demand drafts, I should check the signatures and then immediately confirm the advice of the paying bank. I check, and if I do not receive a proper confirmation, I should take immediate step for asserting the reason. For interbranch accounts, I should adjust only based on advices received. Prompt action should be taken if there is any discrepancies. For credit card operation, effective screening should be there. If I'm going to store the cards, because they have limits, right? That's why I have to keep it very safely. And there should be a merchant who can say that this is the particular limit, that has to be properly there. All transactions should be covered, because say for example, if there is some lag, okay, and my limit is only 1 lakh, I'm making 3 different transactions which is exceeding 1 lakh, okay, then if there is no proper control, I will be overspending, right? And prompt reporting should be there. Reimbursement monthly after verification. See, the customer has swiped the card, okay, and I've gone to bank, right? See, for example, okay, it's not, I don't think so, but I'm not sure whether it's exact scenario, but I'm just trying to explain you, okay. Customer is swiping in the card, okay, this gets to the bank, okay, the spin everything, okay, but later on the transaction failed, okay. Now can the bank repay the exact one? No. Since the transaction has not succeeded, you cannot repay, okay, reimburse. That's what they're telling. And reimbursement should be gross of commission. There's no net of commission is not there. Gross of commission. This is an important point, okay. And then a system to monitor and follow up should be there. Payments overdue should be, you will receive a call, right? Whenever you are dealing, even by one day, the customer service will call you. They will ask, when are you going to pay, sir? Right? They are following up with you. And periodic review should be made. Now, we are moving on to the next topic of, till now we have discussed internal control requirements, right? Now let's move on to CRR and SLR requirements. What is CRR? CRR is nothing but the cash reserve ratio. Cash reserve ratio. It is a specified minimum fraction of total deposits of customers with commercial banks have to hold as reserves either in cash or as deposit with the central bank. See, what's nothing but I am saying, see, assume I have 1,000 rupees deposit. I have 1,000 rupees deposit. Well, every 1,000, will all the persons who have deposited with me, the rupees 1,000, will come to me at the same time and ask for me? Ask me? No. Generally it's a no. Generally it is a no. A certain percentage of people could come in a day, right? That is what this requirement CRR says that. To fulfill that requirement, I have to maintain a liquid cash or deposit with central bank. That is known as cash reserve ratio. Okay. This is an understanding. Okay. Then SLR. So requirement that every commercial bank is required to maintain in the form of certain liquid assets such as gold, cash and government approved securities before providing credit to the customer. Okay. This is based on liquidity. This is with respect to the cash. Just see, generally liquidity will be there. Okay. If the liquidity amount, even I'm not able to bear the liquidity, then it will be from the cash reserve ratio. Okay. The SLR auditors should verify the compliance with the SLR requirements in 12 odd days in different months of the fiscal year, not being Friday. So every month I have to check for one day which is not a Friday. Okay. Then, what are the audit procedures? I have to obtain understanding of the circulars, and then I have to check the weekly trial balance, and then I have to test on test basis I have to check the retail position. Okay. Demand and time liabilities, and examine the computation. And when examining the computation, I have to check these areas. Okay. These items have to be excluded from liabilities. These items have to be excluded from the liabilities, like capital and reserves, because this is generally right. It's true. And those were taken from the RBI, Exim Bank. Those governmental authorities have to exclude. Okay. Then, part amount of recoveries from borrowers in respect of debts considered as bad and doubtful debts, amounts received in Indian currency against the import bills, analysis the deposit balances lying in linked branches for agency business, margins held and kept in sundry deposits for funded facilities. Similarly, these things have to be included now. Now we have discussed the exclusion. Now we are going to discuss about inclusion. Net credit balance. Borrowings from abroad by bank in India needs to be considered as liabilities to others. Thus needs to be considered at gross level unless net. Okay. Okay. Unlike liabilities towards which are permitted to be netted off against assets towards banking system in India. See, if I'm borrowing from outside India, it will be on gross basis. If it is from India, it can be netted off. Then, nostro minor accounts have to be considered as liabilities to others. Okay. Then, reconciliation of nostro accounts is to be scrutinized. Examination with the consolidation prepared in the blank by the bank includes all necessary information. Even though interest accrues daily, it should be booked only at periodic intervals. Okay. I should apply the audit procedure to check whether the consolidation procedure is proper. And reporting on the compliance with SLR requirements, auditor should specify the number of unaudited branches. Okay. Now, let's move on to the next topic, which is nothing but the verification of assets. The first asset would be cash, bank balance, and money at call and short notice. The basic objective is to verify the completeness, existence as on the date of balance sheet, and the audit procedures have been tailored to meet this. Okay. Basically taken care by the treasury operations. Okay. So cash, with respect to cash, what are the focus I have to make? What is the audit procedure? Generally, what the audit procedure will do? Physical verification and check them with the and its reconciliation with the cash registered. Balance with the Reserve Bank of India. I have to verify the ledger balances. I have to check whether the cash transfer remaining unresponded, revenue items require adjustments or write-off, other credit and debit entries originated in the statement provided by RBI remaining unresponded for more than 15 days. These are the items which require special attention. Balance with other banks. Okay, here I have to check whether there are no debit for charges or credit for interest outstanding on all items have been taken to revenue for 1 year have been taken for. No check sent or received in clearing is outstanding. All bills sent for collection and outstanding or closing have been credited subsequently. Okay, that is like subsequent year I'm checking, see, in receivables we used to do this, right? I have one balance, then I will check the receipts after the year end, right? Similarly, if I'm outstanding have some bills of collection, I've checked whether it has been received after the year. Large transactions in the bank accounts to ensure that no transactions have been put through for window dressing, particularly towards the close of the year. Money at call and short notice. Proper system of authorization should be there. Call loan should be verified with the certificates of the borrowers and call loan receipts held by the bank. Aggregate balances comprising this item as shown in the relevant register tally with control accounts as per the general ledger. Subsequent repayments received from the borrowing banks to verify the amounts have been proper, and then interest has been properly accrued. So this is with respect to cash deposits with the bank and money at call and short notice. Now we are moving on to the investments. Generally, what we'll just focus on the area of focus. Okay, we'll just read out. You can mark this. Generally, you could write this focus and write 1 or 2 points. Okay, let's read out that also. Okay, fine, that's fine. Internal control, evaluation and review of investment policy. Here, see, review of investment policy, and I have to set out the investment objective. Separation of investment function, which means there is a segregation of duties. Examination of reconciliation, GL should match all the which is supporting documents. Examination of documents, investments made are within the authority, whether all the constraints are within the are not are within the bank's rights. Okay, an acquisition or disposal should be verified with the supporting documents. Physical verification, those I have mentioned in the books. Supporting investment documents have to physically verify. Verify the investment held with the public debt office of RBI custodians and depository with a statement of holdings as on the date of the balance sheet date. Independent confirmation request can be made in accordance with SA 505. In case independent confirmation are not received, bank alternative or procedure like getting bank personnel to download investment statement from eCubear for government securities in auditor's presence can be designed. BR would be known as bank credits. Okay, something then. Examination of classification and shifting. What does this mean? Generally, under SFM you have to read this term, right? Available for sale, held till maturity, available for trading. Even in FR you would have read it, right? Held till maturity, held for trading and available for sale. There could be some cases, okay, where I'm going to shift between each of these things. Then it should be in compliance with the regulatory norms and policies. Okay, examination of valuation. Method of accounting, I should verify 3 classification that is we have discussed earlier, right? Held till maturity, held till value for trading, held available for sale. When the relevant valuation principles have been duly followed, and then compliance with RBI guidelines, compliance with non-performing investment guidelines, and then similar to non-performing asset, we have a non-performing investment guidelines. Okay, it's nothing but those where interest and principal is in arrears or remains unpaid for a period greater than 90 days. All income from investments is properly accounted for. Adequate disclosure is made whenever there is change in the valuation method, and then if there is a sale, then profit or loss should be charged to profit and loss account, and TD certificate should be verified. Dealings in security on behalf of others. I'm doing security trading on behalf of others. Like we have the third party platform, like Kotak deals with our securities like that. Okay, prior approval is there. Bank's income is fairly stated, and then if there is any undisclosed liability breach, that has to be disclosed. Special purpose certificate relating to investment, meaning separate accounts for investments made by it on their own investment account, on PMS client's account, or on behalf of the constituents. Okay. But as per the RBI guidelines, this PMS account should be separately audited by the external auditor. This could be an unsecured. As per RBI guidelines, banks are required to get their investments under PMS separately audited by the external auditors. Then we have audit review and reporting. Half-yearly review should be there, which means 30th September. Generally, the financial year is from April to March. So, 30th September and 31st March, the half-year ends. That's when the bank should undertake half-yearly reviews. Okay. And it should also conduct concurrent audit, and the report should be placed every month. Okay. Then advances. Advances could be classified on the basis of nature of advance, nature and extent of securities, place of making the advance, and it can be also classified on the basis of sectors. Okay. Then, what is the audit approach? I have to check whether the advance outstanding is it proper, is it complete, It represents the amounts due to the bank. Already it's properly supported with the loan documents. No unrecorded advances. Valuation is appropriate. Advance are disclosed, classified and described in accordance with the requirements. And then appropriate provisions have been made. Okay. So here what are the 8 part procedure. Those are the brief procedure. Let's discuss about each heading. Okay. Evaluation of controls over advances. This could be an important question from examination point of view, but okay, I'll just go over the points. So please mark it as important and read it once again. Okay. Credit appraisal should be made. Sanctioning should be there with the legal authority. All necessary loan documents should be there. Compliance should be there with the terms and conditions. Existence, enforceability and valuation of security should be there. Validity of recorded amounts. Review of operations. And then whether it has a proper system of review and renewals. Whether the drawing power is being calculated properly. And then compliance with the loan policy of the bank as per the prudential norms. Then substantive audit procedures. Okay, it should verify the correctness of the master data. Whether each customer's, single customer ID for different accounts. See, I may have one savings account, one deposit account, one RD account, one PPF account in the same bank, okay, or one NPS account in the same bank. Everything is in the same bank. Then what happens is that everything has to be tagged to a single customer ID. All large advances should be examined. Okay, if there is some advances in SMA 1 and SMA 2, you would have read this, right? SMA 1 and SMA 2, those advances has to be checked in more detail because it will be sooner or later it will be falling onto the NPA category, right? I have to check because this will be considered as problematic account. Then there are any accounts that are being adversely commented by the current auditor, so current auditor's report has to be gone over. And then list of restructured accounts, quick and early mortality accounts, which means I have opened the account today. Okay, within 12 months it has become NPA. That is quick mortality account. Okay, then completeness and accuracy of interest charge, carry out appropriate analytical procedures. So what are the audit procedures with respect to the recoverability of advances? I have to check the periodic statements submitted by the borrowers. I have to check the latest, check and review the latest financial statements of the borrower. I have to inspect the security. If it is stock, I have to go and inspect the stock of the particular customer, or stock audit report should be obtained. Auditors reports in case of borrowers having credit facility from the bank beyond a cutoff limit fixed by the board of directors. Now, then we have verification of asset, classification, income recognition. Those have been discussed separately, right? We know it. Hope so. Now, classification of provision. How is this provision is to be classified? I have to check whether the system which is there to identify the ongoing classification of advances without manual intervention. Whether the classification made by the bank is appropriate in terms of RBI guidelines, whether the unsecured and secured portion is bifurcated separately. Review and compare the current date MPA with the amount of the last year. Okay, if there is many big change, or see, last year it was only 5% NPA, now it is 25% NPA. There is a huge change. For that, reasons have to be ascertained. Okay, during Corona period it was there. Okay, but now the economy is booming again, right? So now there is circumstances cannot be expected now. Accounts regularized near the balance sheet date, which means it was very bad performing account. But I've asked the customer, please deposit somehow. You deposit some huge amount now. Okay, you can withdraw after 15th April. Just like regulation has been made only to show account is actually not proper, but regulation is made just to show a fake position, right? Those have to be checked. Then drawing power calculation should be as per the extended guidelines as per the board of directors, and then it should be in compliance with the sanction letters. Special consideration should be given for the stocks covered under LC and guarantees and sundry creditors. Drawing powers need to be calculated carefully in case of working capital advances to companies engaged in construction business, because it is work in progress valuation is very much huge and this requires huge actual calculations, right? That's why. And then the stock audit, including audit of books, that should be carried out by the bank for all accounts funding exposure of more than split limits. Accounts with temporary deficiencies, banks should not classify an advance account as an NPA merely due to the existence of some deficiencies which are temporary in the nature of non-availability of drawing power based on the latest available stock statement, balance outstanding exceeding the limit temporarily, or non-renewable of limits on the due date. However, stock statements relied upon by the banks for determining the drawing power should not be older than 3 months. So 3 months or less stock statement should be used for computing the drawing power. The outstanding in the account based on drawing power calculated from stock statement older than 3 months should be considered as irregular. Limits not reviewed should be periodically reviewed within 180 days from the due date of ad hoc sanction. Asset classification should be based on the borrower wise and not facility wise. Borrower wise and not facility wise. This is the key term in the banking audit. Asset classification should be based on the borrower wise category and not facility wise category. Government guaranteed advances, if it becomes an MPA, income should not be recognized. Okay, if it is central government guarantee, it does not become as NPA. Okay, it becomes as MPA only when the central government invokes the guarantee, repudiates its guarantee when it is invoked. Repudiates its guarantee when it is invoked. This says, I'm not going to pay you now. Until then, it will be not treated as NPA. Okay, but this is not the case for the state government. If it is beyond or overdue for more than 90 days, it will be treated as NPA. Okay, agricultural advances, it is classified depending on the duration, short term or long term. The NPA norms would be applicable according to the agricultural term loans. Okay, term of the agricultural term loans. Provisioning towards standard assets. It is understood the provision for standard assets is also required to be made at variable rates in respect of different sectors for the funded outstanding in accordance with the RBI norm as a matter of prudence. Restructured advances. It's like it's an act by which a lender, for economic or legal reasons leading to a borrower's financial difficulty, grants concession to the borrower. It involves modification of the terms of advances, including alteration of the amounts of installment, alteration of repayment period, rate of interest, sanction of additional credit facilities, etc. to help in curing the default. Okay, it may be classified under standard, substandard and doubtful categories, but such restructuring cannot be done with a retrospective effect. Okay, on restructuring, account will be downgraded from standard to substandard. NPS will remain in the same categories. Upgradation, which means I'm going from substandard to standard. That will be upgradation. There can be a possibility of incorrect upgradation, so that has to be properly checked out. Some genuine recoveries will be made, then the upgradation can be made as on the date of balance sheet. Sale or purchase of NPA, those can be made only in accordance with the accounting policies. Those which has been NPA for at least 2 years can be sold. Okay, it should be sold only on without recourse basis. It should not assume any risk with respect to that and sold NPAs, and then no circumstances NPA can be sold to another bank at a contingent price. It should be received on an upfront basis. There is no concept of contingent price, and the bank has not purchased any NPA, it has sold earlier. So with respect of sale of NPA, we also have to check whether it has been removed from books of account. If it is less than the book value, then shortfall has to be charged to the profit and loss account. If it is sale value is higher than the book value, then the excess shall not be reversed, but it will be utilized to meet the shortfall or loss of the other similar NPAs. Okay, for purchase of NPAs should be that I should also provide for the provision requirements. Recovery should be made first adjusted towards cost, and then only it should be taken as profit. And it will be assigned a weight of 100%. For fixed assets, efforts with respect to lease or intangible assets, all the provisions that is applicable which is there in the accommodations will apply to the banks also. Audit approach, have to maintain a fixed asset register or fixed asset management software. Internal controls, with respect to internal controls, what are my areas of focus? I have to check the controls over expenditure, accountability, utilization controls, information controls, whether the accounts in respect of fixed assets are maintained at the branch or locally, centrally, location of documents and acquisition are being properly communicated by the head office to the branch or branch to the head office. With respect to the provisions, what are the things? Opening balance, purchases, self-constructed assets, it should match with the fixed asset register, and in the case of leasehold provisions, all the improvements should be capitalized or amortized over the useful life, and title should be the name of the bank, and then premise under construction should be properly there under the heading capital work in progress, premise under construction, and should be properly valued for. Advance payments to contractors should be shown under the head fixed assets. Okay, for such fixed assets should be shown under fixed assets itself. Okay, then premise are revalued and basis of revaluation, the actual certificate should be verified. No immovable property and those required for use of bank have been included in the fixed assets. Okay, then other fixed assets, the procedure discussed above shall apply to other fixed assets also. In case of transfer, the auditor should check the depreciation has been provided till date of transfer. Intangible assets have to verify the guidelines, and then The classification should be made for the proper and it should be grouped together. Items like safe, deposit vault should not be clubbed together with the office equipment or theft alarm system of the bank. This could be an MCQ. Okay, items like safe, deposit vault, which is the thing means the locker, bank locker we have, right? For cash, those vaults, that is known as safe deposit vaults. That should not be clubbed together with office equipment or theft alarm system. Instead, it should be shown as separate item. Okay. Then, sale of fixed assets, again I have to verify the copy of the document and check whether the profit or loss charged to profit and loss account. Leased assets, I have to check whether they are in compliance with the accounting standards and the RBI circulars and guidances. Impairment of assets, again compliance with the RBI circular and guidances. Then inter-office adjustments, I have to check and reconcile all the adjustments made during the year. Interest accrued, though it accrues daily, it has to be provided one day at the proper intervals. Okay. Interest income will be there only when it is realized. Okay. Tax paid or advance tax, I have to check whether TD certificates, and then I could also inform the head office with respect to the credits available with respect to the particular branch. Stamps and stationery should include only exceptional items of expenditure on stationery like bulk purchase of security paper. See, like I'm purchasing 2 A4 sheets now. Okay, can I put that as asset? No, it's just an expense. But I'm purchasing 10 coils of paper, then that is an asset. Okay, that is known as bulk purchase of security paper. This is effectiveness and anonymity of internal controls, and I have to do a physical verification, and I have to check whether the see if it is an inventory also will put something towards the current period cost of goods. So right, that's how we have to take some part of the cost of the stationery if it is there in the asset, that has to be taken when it is utilized to the profit and loss account. Non-banking assets required in satisfaction of claims. Heading includes all those immovable properties which is the bank has acquired in satisfaction of debts due to or its other claims, and these are being held in the intention of being disposed of. See, there is some person, say X, he has taken a loan from bank, pledged to the house. Okay, he is unable to pay the loan. The bank would have taken over the house, right? That will be non-banking asset acquired in satisfaction of claims. The main motive was that they will sell it out, okay, at auction, and they will receive the money. That is with the intention of being disposed of. I have to check the documentary evidence, the ownership transfer, and then I have to check the compliance with the Banking Regulation Act, and then as the date of acquisition should be recorded an amount which is lower of cost, or the lower of net book value of advance, or the net realizable value, Okay. Then we have one last heading which is nothing but the others. It's a residual heading. For example, it covers claims which have not been presented, items representing addition to assets or reduction in liabilities which have not been adjusted for technical reasons. Something like that. Okay, or prepaid expenses could be a best example. Others. Non-interest bearing staff advance. Generally for staffs we don't get any interest. Okay, those has to be given. Relevant documentation has to be made. Every month it should be deducted from its payroll. Okay, then loans and advances to officials and its relative should again within sanction limit, and senior officials should be there. Beyond the amount should be reported to the board of directors. Security deposit, examine security deposit with respect to the documents. Okay, I should ensure that security deposit is not due within the next 12 months, or if it is due, I have to check whether it is recoverable. And then suspense account, if there is any things which is there here, I have to ensure that this has been properly taken to the respective accounts. Prepaid expenses, I have to check the basis of allocation of expenditure and charges with respect to that. Miscellaneous debits, balances on government account. After there will be some accounts, right? For government, there is some 100 rupees, 1000 rupees could be there. This is miscellaneous. Okay, those would be reviewed with respect to the aging statements, recoverability of old outstanding amounts, claims for reimbursement have been lodged properly, and then for major variance as compared to the previous year figures, verify whether the same have been recorded and reviewed. So with this we have completed category 7 in the Audit of Banks chapter. The rest categories will be discussed in the next video. Hope you found it as a proper revision video rather than discussing the concept. Okay. It is better to know something than to ignore this chapter. That's what the motto is. Okay. Thank you so much. Stay tuned.